thank you all for attending. So yeah, let's start this panel on retail central bank digital currencies. We have an esteemed panel of three folk, basically one from ConsenSys, one from PwC, and the other from Saramitsu. I'm going to let you give them all a chance to introduce themselves when they actually answer our first question. So basically, to whoever wants to start first, tell us, what is a central bank digital currency? Give us your elevator pitch, what you're trying to solve, and also introduce yourselves as well as your companies and how you're actually solving in this space for the audience. Maybe we can start with you, Charles.
Sure, thank you, Colin. CBDC, a central bank digital currency, is a legal tender, and it's the normal currency you will use as a banknote or as a dollar or any currency in your bank account, but it's actually moving on new rails, and these rails are blockchain rails. So it's tokenized money issued by central banks. My name is Charles Diossi. I'm the director for ConsenSys for the APAC. And I lead the two CBDC projects at ConsenSys, one with the HKMA, the project in Tannan, Lion Rock, as well as one with the Bank of Thailand for domestic CBDC.
Thank you. Lucy?
Yeah, great. Thanks, Colin. Yes, so my name, I'm afraid you can't see me, but you can hear me, is Lucy Gazmarian. I'm with PwC in Hong Kong, and I'm part of their crypto and fintech team. And I'm also working on some very exciting CBDC projects and heavily involved in the space. You know, retail and wholesale CBDCs, two very different things, and set to have a big impact on the way we conduct our payments around the world. So very excited for this discussion, and thank you for having me today.
Okay, go right ahead.
Hello, so I'm Makoto Takemiya, so I'm the CEO of Sorimitsu, and we do quite a lot of work with blockchain technology in general. So we work even with public blockchains like Polkadot or Sora project or Polkaswap, which is the DEX. And we also work on enterprise work as well with the Hyperledger project. We maintain Hyperledger Iroha, and we used Hyperledger Iroha working with the National Bank of Cambodia on a retail CBDC called Project Bakong, which is a real-time digital payments system that actually launched on October 28th. As far as definition of CBDC goes, I agree with the IMF's definition that CBDC is a digital representation of a sovereign currency that exists as a liability on the monetary authority or central bank's balance sheet. Thanks.
Thank you. Congratulations on launching on October 28th as well. And that it's interesting that you've managed to use Hyperledger. We'll definitely get back to Charles later, who will tell us a little bit more about how the Bank of Thailand rollout is, and also Lucy's experience around it. But it's a great introduction to what CBDCs are. And also Lucy brought up a very interesting topic, that there's a clear difference between retail and wholesale CBDCs, and I guess the most interesting thing is, how does the retail folk end up benefiting from this? Do they save money for international telegraphic transfers? Do they save money for interbank transfers if there are still fees? I mean, many banks to remove fees now for across banks. What is the retail gain like? For the average hawker, since we're talking about Asia, and there was a very good article today in the Ken about that as well, about how to get hawkers onto things like e-money, for example. So how do you get the retail folk interested in retail CBDC?
I guess a good design and a good implementation should make the CBDC totally abstracted and the technology abstracted for the end users, and it will just make them be able to use smarter money. So I hope not too many people will realize that they are moving or paying with CBDCs. So well implemented, the solution will be.
So make it transparent like cash, except electronic.
Exactly, and make it easy. Just we are looking at mass market implementation and adoption. So you really want to have something an onboarding which is easy, so that your cousin, your grandma, or anyone will be able to use the technology without realizing that there is a cutting edge technology behind. So making the UX as smooth as possible.
Fair enough. And Makato, do you have any thoughts on this as well? Largely because you've implemented this in Cambodia, and I think the market in Cambodia, for example, is very different from, say, the market in Japan, and so forth.
Yeah, so I would say that for retail CBDCs, there's really two different benefits. One is in the short term, and one would be in the long term. In the short term, reduction in transaction fee costs, greater ease of use, greater reliability, even you could say international payments as well, ability to cross borders very easily. These are some of the features that retail CBDC has, and I totally agree also with what Charles said about the technology maybe should be transparent to the user, and technology changes every few months, and I think that it's important to focus on actually meeting a business case or use case that users have. In the long term, I would say that there's a lot of benefits in retail CBDCs as far as smart money, programmable money, whatever you want to call it. You can create new types of assets that don't exist yet. And this is a very long-term potential, but I do think that there's going to be a lot of potential there for stabilizing economic systems so that you don't have boom-bust cycles as much. There's a lot of really cool experiments being done with some of these ideas in the cryptocurrency space. And as soon as monetary authorities and central banks start to bring some of these in, which will be maybe 20 years from now, we'll see. But this will have a big effect on society potentially.
Fair enough. So yeah, I guess it's important that from a retail standpoint, it's not just sounding like it's going to be local, but also potentially to disrupt things internationally as well.
And Colin, if I may, there is also another type of stakeholders and possibly customers of CBDCs. So we talked about the end users here, the retail users of CBDCs. But if you look at the journey for central banks right now, they also need to convince and onboard the banks, the payment service providers, and many others, which have today within their stack and at reach payments which are working fairly okay, payments which have an established business plan and profitability. So it's important also for central banks and for technologists and designers of new money like us to think also not only about the end user, but also about the people involved in the ecosystem overall. And why would they move to this new platform and this new type of money, knowing that there is today money which is working well, to be honest. It's perfectible. But we need to define together with all the stakeholders of the CBDC ecosystem value proposition, which makes a non-brainer the migration to this new type of fund.
Yeah, actually, that brings up a great thing as well. I think if you've been to Singapore, you're quite familiar with the EasyLink cards, and in Malaysia, there's Touch and Go cards. These are like prepaid e-money cards, and there's already an existing ecosystem where they start accepting them in retail. So sort of a retail CBDC start maybe disrupting their pipeline for making money. And how do you sell it to them where a good example is in, say, Malaysia, the Touch and Go system. If you pay for parking with it, you end up paying 10% extra for it for absolutely no reason besides the fact that they're a monopoly. How does one go about convincing them that this is a good idea? Or even getting people to realize that they can save cost. I guess it's a huge challenge for central banks as well.
Yes, absolutely. I think it's important to find use case with the stakeholders and with the central banks to make sure that you're not making faster money. I think the world can survive with money at the speed it is today, but really smarter money. Smarter money is a very generic term. It can come in all shape and forms. But if you look at the users, looking at what is their operational cost, what are the expenses around their operations, how you can reduce the risk? How can you make money coming in and out of your business with maybe some labels to make sure that the money has been properly KYC'd, making maybe wallets which are more welcoming and easier to be used maybe by tourists, if we speak of countries like Malaysia or many others. So how can you create new type of money usage which are bringing business or which are optimizing the business and the bottom line to really create the adoption? And that's really, I think, the core focus everyone should be spending time on.
Yeah. So I don't know how many of you read The Economist this weekend, for example, but they actually had a very good article on central bank digital currencies potentially breaking the banking system. And I guess it's such a great time for us to have this panel because, from a stimulus standpoint, it is, and I think a lot of nations have been giving stimulus to their citizens recently. It is very good for citizens to be able to get payments without hassle. And a lot of them have been doing it via tax records and bank accounts, right? So they've been giving you if you've got it's like a tax credit. So if you've paid taxes before you get it, otherwise you have to apply. But I think all of us deal with multiple banks since we've probably dealt with crypto for a long time. So we dealt with fiat banks. Now, and we also know that banks have costs associated with. But will central bank issued accounts be virtually free, and will that start disrupting banks such that we should maybe stop buying banking stock, for example? Are they in trouble by retail CBDC, the retail CBDC movement?
Colin, it's Lucy here. I feel a bit sorry for banks. They've been under attack for pretty consistently since 2008. If it's not the regulators, issuing all this legislation and compliance obligations, it's just the general movement of the fintech industry, right? And we're seeing all the tech fins coming up. So the internet giants just providing financial services. And, now the latest onslaught on the banking sector, I would say, is digital currencies. And, a very key theme, because central banks are the first banks to be looking at this. And they were very, let's not forget, central banks have been researching this since 2014. And in early days, they were very quick and sure to say that, the commercial banking sector was not going to be disintermediated by this technology, which is effectively peer-to-peer and operating on blockchain. But I've noticed the tone is beginning to change. And most recently, the Deputy Governor of the Bank of England came out and said it is not the role of a central bank to protect traditional banks. So this traditional banking model, I think, is really being disrupted from every single angle. And it's not that traditional banks cannot survive with digital currencies, but they need to reinvent themselves like every other, part of the ecosystem is having to do and keep up with the times. I think we don't know yet how different central banks are going to incorporate the banking sector. There are different central bank digital currency architecture models. Some are very sure that they go through the commercial banking sector and that they are part of the distribution system. So China is a case in point. They are integrating the state-owned banks into the distribution of their retail CBDC. But then you're getting other central banks, that potentially will have a different view on this. And, I think who is the provider of financial services and payments is just all in flux right now. And I think, as Charles said in his earlier point, the most important thing is that we have benefits for the end user and that actually we just get better money that works better. And, we can't prop up systems and frameworks if they no longer make sense. So, I'm not for one second going to say that I think that commercial banks are going to go under in the next year. But certainly, digital currency is another challenge to a core banking service.
Fair enough.
Yes, maybe Colin, to complement these remarks from Lucy, I don't see the banks being kicked out of the ecosystem of CBDCs. I think some of them will take too much time to adapt and probably suffer from their slow innovation or integration of new technologies. But the central banks need also the banks for all kind of macroeconomics or risk management. So I don't think any central banks really wants to manage all their citizens' bank account directly. So there is a value proposition there for the banks to stay on. They probably want to stimulate or keep stimulating the ecosystem of banking, making sure that banks keep integrating more and more technology stack in their operations. Some banks, such as Singapore, some central banks, such as Singapore, Hong Kong, and many others, have virtual banks now, which have been launched to serve better the market and to also stimulate their ecosystem. And CBDCs can be one way for virtual banks can be one way to accelerate the adoption of CBDCs. But I think there is probably some one part of the fintech ecosystem which might be suffering quicker than we think from CBDCs is probably a certain category of fintech companies and fintech startups with the value proposition around essentially kind of optimizing and efficiencies within the insurance or within the payment industry or within the banking industry. And if you look at this, when money issued by central banks becomes smarter, there is probably a lot of fintech companies' value proposition which might be fading away. So we might see more suffering in the fintech space. I had conversation with VCs recently where we were very, very worried about some of their portfolio companies, which value proposition might be kind of shaded by CBDCs when they get implemented.
Can you name some examples, if you don't mind?
No, I don't have. Think of the startup or the startup helping you with moving money cross-border. So today there is companies. There is many of them which are helping with cross-border payment. Think of startups around maybe the insurance industry, which CBDCs can help to a certain extent to make sure you're not double claiming, or you make sure you're not claiming money for your hospital bill and actually you're going to shop with this money. So around this, all these use cases are being discovered and put into reality, and some value proposition will fade.
Yep, fair enough. So,
I think that.
Yeah, go ahead.
I was just going to say that I think most central banks are very conservative, and I think the last thing they want is really to compete directly with the banking sector. That being said, banks have a lot of pressure right now because of regulation. I think just in ECB puts out around 300 pages of new banking regulation per year. So complying with that is not a very easy thing to do. I'll just share an anecdote from our system in Cambodia. In Cambodia, it was designed to be a two-tier system, similar to what China has been doing, where the distribution channel is through existing commercial banks and payment service providers. So you don't have to disintermediate these people if you make the right design choices. You can actually work with them. In that case, it becomes something similar to what Europe has already done with PSD2. And open banking. So it's just a different way to do it. So you get a transaction finality with each transaction in real time, because it's on the central bank's ledger. But everything else is not really changing that much. There's a lot of minor details though, as well, as far as the design choices you can make.
Fair enough. So you did mention central banks being relatively conservative, and Sweden started looking into this around 2016. Maybe just started trying to roll out e-kronas. Uruguayan central bank tried to look at this since 2017. So will we start seeing this in 2021? Or how long did it take your Cambodia rollout, for example, and also I guess even for Charles, how long did it take the Thailand rollout? Because it's generally curious. Is it a 4-year life cycle project with a central bank because they're very conservative, and so forth?
Yeah, in Cambodia we started development, I would say, in earnest in 2017. So it's about three or so years. We started the pilot in 2019, and so it takes some time, mainly because it's a new system. But the technology is not the hardest part. I think the hardest hurdle is actually working with the existing banking supervision and regulators and trying to make the design choices that they need, so that because even a central bank, of course, has many different towers, and each one wants to kind of do its own thing, and so you have to kind of reconcile everything. But I think in the end, is a very conservative approach that we did.
Fair enough. Thank you, Makata. Charles, do you have any comments about how long it took for your Psy rollout?
I mean, I can't speak for central banks. They have their own views and planning, but I think looking at Cambodia and what Makoto has went through, I think it's probably going to be similar type of timelines. As mentioned, the technology is not the only part. You have to make sure your regulation is there. You have to test the technology also. And testing technology is not happening over a couple of weeks. So you want to go in phases. And I guess if you look at Cambodia, if you look at China also, which is probably the retail CBDC, which is the closest to being in production, you see that there is different phases of beta version, different tests, because after you launch it, if you design it properly, it will be very hard to kind of stop the service or stand by the service. Money is working 24/7. So there is a big part of risk management and making sure you look at all the edge cases and kind of test proof the solution. So yeah, it takes some time, but I think it's important to start early, and we see many different central banks today looking at more and more into a pilot type of projects rather than purely research.
Lucy, have you experienced much of this in terms of rolling out with all the exciting work you're doing as well?
I mean, not going to share too many details of this at this point, but yeah, I mean, some really interesting cross-border wholesale CBDC innovation. We've got to the point where central banks are now on phase 3, 4. They're really sort of the experimenting phase is over, and now we're going to actually sort of using real money. And it was actually it was the UAE that actually came out and they're finally using real money in these experiments. So I think we're just, China's about to issue their CBDC, their eRMB. And, I would say for a lot of central banks, yeah, the experimental phase is over, but it's just, it's a really exciting moment.
It's a great segue into China. So thank you, Lucy. So I guess for many of you who have either visited China or read about China, you'd probably know that pretty much everyone uses Alipay or WeChat Pay. WeChat Pay probably long before Alipay as well. And China recently actually did start bootstrapping this by, at least in Shenzhen, if I'm not mistaken, where they actually said, we're going to give away 10 million yuan to 50,000 lucky people that apply, so about 200 RMB per person via lucky red packets. If you use WeChat Pay, you can also give away red packets. And I believe it sort of just rolled out in the October timeframe as well. So what can the rest of the world learn from China, because they're moving pretty fast, and we've seen Japan say, hey, if China's doing it, we've got to kind of do it too. So what can we learn from China, especially because the ecosystem is so different there, and everybody was already used to using things like WeChat Pay and Alipay, because WeChat's also a messaging app.
I guess the takeaway for a regulator or central banks is that when your payment industry stands only between two giants, it becomes a problem. The banks cannot always re-enter this market, and they want to kind of reshuffle the cards and making sure that they get access, they give a fair chance to everyone, and more importantly, they get access to data. So if you look at CBDCs, you can look at this from the user perspective. Okay, it's fast money, it's smart money. When you are a central bank, you get also the opportunity, if you decide to build some kind of dashboard of your economy, knowing where is your money, what is the money being used, when you lend money from the banks, is this money lended to be buying real estate, to be consuming on weekdays in restaurants? You get to understand your economy much better. So you get access directly to the data. And if you look at this for an economist sitting in a central bank office, they get data sometimes 6 months later, 9 months later, after the action has been happening. And when we see our economies today being so reactive and so under so much stress, it can only be a good asset for central banks to kind of limit the number of intermediaries so that they can collect the data about their economy and understanding how it works and how their policies will affect the economy. So collecting data is one thing. Of course, it brings a question of privacy. So I think there is a lot of work, and we see that in many projects or research papers from central banks. CBDCs brings the big question of privacy, and implementing a CBDC in China, implementing it in other parts of the world does not have the same privacy or data relationship from the users in every places. So it's really bring a lot of questions. A question for the technologists, such as ConsenSys, looking at how do we solve the problem of central banks? How do we enable them to initiate some private transactions between users or between whatever is the context, but helping also the regulators to implement and respect the privacy laws of their jurisdictions. So there is a lot of ways to look at this. And coming back to the Shenzhen example, I guess the CBDC in China has strong competition from the payment providers such as Alipay and WeChat Pay. So they need to create some buzz and some awareness so that when a new payment option will pop up at shops in China, people will get the curiosity to try and onboard into the system. And I think ultimately Alipay and WeChat Pay will also use the retail CBDCs. So there is a lot of things which needs to be written in the history of CBDCs in China and elsewhere. But the China journey is surely a great learning for all of us.
Yeah, just to add to that, Charles, I mean, it's interesting that actually the first part of the world where they're rolling out a CBDC is arguably the most advanced anyway in terms of how they pay for things. So I think from the actual user experience, it's sort of, it was a bit of a sort of anticlimax. It was like, well, my payments work just fine. And, I think that's the point, is that this CBDC is actually potentially more of a useful tool for the central bank and the data that is collected on the back end in terms of being able to manage the economy more effectively, and actually from the user experience perspective in China, because they're so advanced with the Alipay and WeChat Pay. But I would also say if they were to be airdropping those tokens into rural parts of China, you might find far more excitement, right? Because suddenly they have a digital currency that's not necessarily linked to a bank account. It's a token. You don't necessarily need Wi-Fi, and for rural parts of China, it's going to be far more groundbreaking as an innovation than it is in Shenzhen, where everything is as efficient as as cashless payments could possibly be.
Yeah. I think those are good points. I think the central bank, by having kind of a dashboard of their economy, can actually do really refined credit controls, which they already do quite a lot of, and they can bring this to next level of optimizing their economy. Some central banks don't like to have that kind of level of control, however, and there's pros and cons for both. Regarding privacy, I think it's a very difficult question, and that's why central banks shouldn't get rid of cash completely. It's important to have cash as a backup, just as a check against total control. At least in my opinion. In Cambodia, that's certainly the case. Also, the central bank in Cambodia doesn't have personal information that's being held by the commercial banks, and the central bank only knows about like the asset transfers on the ledger. So it's this kind of segregation of data that can also prevent too much control or kind of unnatural market conditions as well. So yeah, the way you design things is very critical.
I'm glad you mentioned that. So design is critical, and first we'll address kind of what Lucy said. How does this make a very big difference when they already are so used to like things like Alipay and WeChat Pay? Because the Singapore example is that there is something called Pay Now, where you just provide a mobile phone number and you can pay anybody, even a corporate entity can be paid. And we also see the same thing in Malaysia with Do It Now, and it ties in with not only banks. It's basically replaced interbank transfers, but also basically works with e-wallets. So how do these where do the retail CBDCs come in when you have already got things like Pay Now, which is fairly instantaneous with a mobile number? Everyone's got a mobile phone, we presume. Or several SIM cards at least. So yeah, where does this fit in, so to speak? Because there already are instant settlement solutions today.
Yeah, but maybe CBDCs are not faster money only. They can be a way to grow the payment ecosystem in a more natural, organic way, by giving a chance to more startups or more businesses to operate financial services via programmable money or infrastructure, which is more open. And there is also probably not so much immediate benefits against fast money via this fast payment system you're describing, but maybe for the operators themselves, they will be able to onboard maybe visitors in the city, as I was mentioning earlier, or they will be able to get like their accounting made in a much more automated manner, or link their ecosystem to some other apps and look at the composability of money where you create new use cases. And probably the same way in your wallet today, you might have a few banknotes, maybe a few coins, as well as a credit card. You will have also maybe all this different type of money at reach. Should it be within your physical wallet or maybe within your apps? And depending on the usage, or maybe depending on the quality of the integration within the ecosystem, you will decide to go for one money or another. How about maybe central banks will give directly interest to currency holders? There will be maybe also central bank situations in some countries where holding cash will be something which will be not supported by, or not incentivized or disincentivized to hold cash. So there will be different type of let's say dollars or whatever currency you are operating in, and when they come in different formats, they might have different features. So for example, if I keep my Hong Kong dollar, that's just an example. I'm here in Hong Kong. If I keep my Hong Kong dollar and I've got potentially a Hong Kong dollar issued by the government, which gives me like 1% interest rate, I might prefer to keep some of my treasury with this CBDC rather than having it slipping into my Alipay account, for example. So it's a random example. There is no project, no such project to my knowledge, but it's just trying to illustrate that there will be different type of money, the same way we have different type of money today in our pocket.
Fair enough. Yeah, we don't really know much about the interest capabilities. We've only seen, I think, the Bank of Canada basically state that they believe that there should be no added interest on retail CBDCs. But it's dependent on every jurisdiction to see how you get people to use it, right? It's part of the user acquisition cost.
Yeah, I think most central banks typically don't want to make these CBDCs interest-bearing, though of course having negative interest rates or something like a Gesell currency could of course offer new monetary policy tools. I'll just also say that the transaction finality could also be a difference between some of the the commercial payment service providers that exist. So stores who want to have money instantly without having to have settlement periods could get real-time settlement with central bank finality. This could also be useful for preventing things like chargebacks and other types of situations like that. But I think the longer term, you'll see these CBDCs as kind of like the backbone infrastructure, and then corporations or fintechs or banks or whoever will build more robust and user-friendly applications on top. So just like you get cash back with your credit card, you could get some type of analog to interest by holding a private or holding money in your wallet that's managed by a third party.
Yeah. So I suspect we're potentially, I don't know how we're doing for time, but we've talked a lot about concepts and deployments, but I'm really a tech guy at heart. So I'd love to poke your mind on the tech. Technically, do CBDCs actually require a distributed ledger or a blockchain, or is a database that banks currently use, are they enough, or a distributed database of some sort, or must it be blockchain? And we have several different technologies that have been deployed amongst this panel. So I'd love to hear your thoughts on that.
Maybe I can give it or maybe Lucy, go ahead. Yeah.
Me? Sure. So I think, DLT is certainly the tech platform that we've been talking about. On DLT, you can have both public and private applications and networks, right? So DLT is actually a very flexible base layer that's actually just giving you this shared database, and then how you configure that is actually, pretty flexible. From what I've heard, we don't know exactly what China's ERMB and the architecture they're building there, but there's talk of it sort of combining some kind of centralized database with a more open source, maybe blockchain type database, how those two come together and integrate, and then just general interoperability, right, with the actual token and how it operates across different networks, not just within China, but when it travels abroad, when Chinese are doing business abroad, or when they're just tourists abroad, right? So I think my take would be that DLT is the core tech platform, but perhaps can be supplemented in different ways depending on the policy approach of the particular central bank. But Charles is definitely the expert on this one.
Yes, I can give it a go, but Makoto, please complement also. On our side at ConsenSys, we are building on Ethereum. So we built out of Hyperledger Besu mostly, but we also have now within our toolbox Quorum, the Go Quorum implementation for more private type of networks. CBDCs doesn't. If you create a token, this token can live into a single database, but then you create some kind of central actor, which will make your money moving from wallets to wallets not really transparent and not really resilient. So at the end of the day, even though we are building using trustless technology, the end user is always looking for a trust base. So it's important to have this kind of distributed networks with multiple databases, which enable these tokens to move from one place to another, and making sure they are spendable wherever we want to spend them. If you issue to me some kind of CBDC, which I can only spend in your shops or within the shop of your friend, then it's not really money. So if you really want to have this property of money that I can spend my dollar wherever I go, you need to have an infrastructure which allows that. That's where you need to have distributed ledger. I think the reason China is not using yet officially a specific blockchain is because they are starting with a very difficult use case, which is retail CBDC. So you need to have like extremely high throughput blockchain architecture, which are hard to get if you go for a very large network. The larger the number of databases is, the longer there will be, you will need to reach finality of your transaction. So I think they're going for some hybrid system, which is probably a smart decision in their context. But CBDCs and money has no borders. You want to be able to spend your money everywhere, so you need this network to be everywhere. And a central database will not fit with CBDCs in my opinion.
Well, we do quite a lot with blockchain ourselves. So, of course, I'm a fan of the technology, and I think that as far as interoperability, it can help quite a lot, as previous speakers said. I don't think that DLT or blockchain is a necessary and sufficient condition. So you could, in theory, do it with a centralized database, but the cost and robustness required for such a system would be quite hard. And then there's also the security aspect. So if you have a central database and you wanted to, let's say, steal $1 billion and hack it and change some entry, you could, in theory, do it much easier with a central system rather than using blockchain, because at least in the blockchain-based system, at least a dogmatic blockchain or DLT, has private keys distributed among the retail users. So everyone would have some key, and you'd have to, in theory, hack millions of devices to steal a significant amount of money. And so I think that's at least in some countries that don't have all the money and infrastructure needed for IT security, it could help a lot. In Japan, of course, the central bank has their own data centers and lots of fancy equipment. So in theory, DLT might be less compelling in a country like that. But I still think that as far as the interoperability and creating a protocol for composability of finance, it could be very compelling using DLT. And so, of course, I'm a fan of DLT, but I think there are compelling scientific reasons why blockchain and DLT is good for a robust, systemically important infrastructure.
And Colin, to complement that, think of when you're building such a massive and systemic infrastructure, there is cost associated, there is risk associated. And when you build this distributed ledger and blockchain infrastructure, essentially every new participant will cover most of the cost associated with his activity and will contribute to the network. So if you're looking at a central bank, or if you're looking at one central entity building a centralized database, all the cost will be covered by one entity. And then if they want to share it with the participants, they have to negotiate contracts and everything. You've got beyond DLTs, you've got blockchains. Some of these blockchains, like Ethereum, are offering public blockchains where each participant is essentially covering his cost of joining the network and contributing to the growth of the network and the security of the network. So there is some new economics in building public goods to a certain extent, where each participant brings his own budget, his own computing power, and essentially enable the ecosystem. So there is also a very interesting way to finance public goods this way, thanks to the blockchain technology.
So sort of a new form of tax without realizing it.
It's not a tax. You pay, everyone pays for. It's like if you're building a road, everyone is building a part of the road, and all the road eventually became a highway everyone can use.
Absolutely. So maybe one final question, because I think we might actually be a little over time, but we did start a bit late as well. We also Lucy's specifically mentioned tokens a lot as well. So not actually using the term money or all that often. So in the cryptocurrency world, we have obviously got Bitcoin, Ethereum, etc., and then we've also got stable coins. So where do retail CBDCs, fit in with stable coins and cryptocurrencies, or is it just a scenario where you could use a retail CBDC to buy a stable coin if you chose, or buy Bitcoin if you chose? Is it just exactly like money, or is there some kind of correlation potentially?
I think, general sentiment up until probably the last 6 months of this massive bull market we're having in Bitcoin is that Bitcoin wasn't going to be sustainable, and it wasn't going to last and survive. I think that narrative has completely changed, especially in the last few months. And people even in government are saying, in the US government, is saying Bitcoin's here to stay. And I think that the new perspective is that there can be multiple forms of money, which needs to be managed in the right way, so as not to compete with central banks and the monetary policy and monetary sovereignty of nations. But I think different central banks are taking a different stance on Bitcoin and its role as a currency rather than a store of value or anything else. So I would say that I'd be inclined to say that Bitcoin is here to stay, and it remains to be seen whether it's is a store of value or a means of payment. When it comes to stablecoins, I'm less confident they have a place in the longer term once CBDCs are fully rolled out by every central bank and every citizen of every country is using a CBDC and digital currency. I'm less confident on the role of a stablecoin, but very interested to hear the views of the other panelists. But for me, the CBDC is kind of taking out the counterparty risk essentially, and just an upgraded version of the stablecoin that we have today, which is very important because it's getting us towards digital currency. But my view is that CBDCs will prevail.
I think CBDC will win eventually for mass adoption, just because they are more trustable for the mass market. They are issued by your central bank, and there is a privately issued stable coins which have use cases and a clientele and some niche market where they are very much more efficient than other type of money. But as I was mentioning earlier, despite building on the trustless technology, everyone needs the trust. We are in the world of finance, and finance is a business of trust. So CBDCs have a really unfair advantage. And as soon as they catch up from the technology side of things against a stable coin, they will be, in my opinion, winners.
I'll just say a couple of things. I think that kind of DeFi and kind of the idea of composable public finance is a very compelling, I think, vision. It's yet to be seen if the regulatory frameworks in the world will, allow such a thing to happen, or how that will look. But it is very interesting. So decentralized stablecoins, things like MakerDAO are very fascinating. They're very fascinating experiments. That it's surprising that they've come as far as they have. And I think we'll start to see a lot more experiments like this in the future. Technologies like token bonding curves are very fascinating as well. So being able to even have like a concept of a decentralized central bank in a way could even someday exist that has a rational monetary policy, but at the same time is completely decentralized and not controlled by any single party. And I think that will pave the way towards global financial framework, or even interplanetary if you want to talk to Elon Musk. But I think this is a very fascinating field, and it's something to watch. And it'll be interesting to see what central banks can keep up and will embrace these technologies, and who will not. So we'll find out, I think, in 10 or 20 years.
Yeah, that's a really good point. Whether central banks actually keep up with the pace of change, to make them an attractive alternative.
But I guess that's what everyone on this panel is actually focused on, is to make sure that central banks keep up with the pace of change.
Charles is on a personal mission.
Yeah, so I think with everything, COVID might also help accelerate the use of retail CBDCs and other forms of e-money, because people are moving away from wanting to touch cash, potentially.
Yeah, too many germs.
Yeah, I don't know. It sounds like a bit of an excuse. But no, I mean, yeah, I think that it was mentioned when it was the beginning of the pandemic, but I think this whole digital currency train was in motion way before COVID.
Yeah, so maybe we have a little acceleration. We don't wait 4 years for central banks. It'll be a lot less.
Yeah,
I think the journey started way before Facebook and Libra. Libra was a kind of a wake-up call. And following the Libra wake-up call, there is now a lot of peer pressure between central banks. And there is probably happening right now some kind of global race on who is building this first, who has the best and most scalable or smarter money available. So it's definitely a super hot topic for many people in central banks, and also on the legal side of things, making sure you upgrade all your regulations to onboard this new type of money. There is some works to be done by central banks. There is some work to be done by the regulators to make sure the CBDCs find the right legal framework to be launched on time and in an efficient way as well.
Yeah, I fully agree.
If you look carefully, the Chinese government has just or is in the process to to publish a new regulation saying that there will be only one RMB on the blockchain, and this will be the one issued by the central bank's digital, the PBOC. And you might imagine that there will be some other government or regulators either contemplating this option or at least studying this option to make sure that we don't find ourselves with so many dollars that you don't know which one to trust anymore.
Absolutely. So that, again, regulation obviously still plays some kind of role. You don't want to have too many competing things. Even if you give away lots of licenses, you want to consolidate.
Absolutely. So the process takes some time.
Yeah, absolutely. So I actually think we probably are out of time. So if there are any closing thoughts before we actually get kicked out from anybody, go right ahead. You can start, Charles.
Yeah, just keep supporting your colleagues in the bank, your colleagues at regulators to keep the topic of CBDCs progressing. And whenever you have the opportunity to be a first user, jump on it. It's going to be a great experience and something you really want to try as soon as it's available.
Thank you.
Yeah, I mean, I agree. I think this is perhaps, one of the most exciting inflection points in the history of money. And, to have money that we can now program to do certain things, spend it in certain ways, it hasn't actually been done before, right? So we're entering a whole new era of such a complex instrument, which money is now going to become. And, I think in the first rollout and phase one, it's just going to do what money already does. But the features and the code and the software that's actually, made up, that token is made up of, means that there are infinite possibilities in how we can end up using it really in the future. And for me, those developments where we inch by inch sort of break down traditional conceptions of money is just going to be really, really fascinating.
I think through all these decentralized experiments, I think we'll probably come to a greater understanding of what money is, and is it even, is it a very useful concept or not moving forward? So I think this is an exciting time to be in the technology, especially the financial technology field, and let's see where it goes. I think people should embrace things that are work and are logical, and don't be afraid of change.
Thank you, Makato, Lucy, and Charles.
Thank you, Colin. Thank you, everyone.
Thank you.
Great. Thank you. Thank you, everyone. Thank you, Colin. Have a great evening, everyone. Thank you.
Cheers.
Cheers. Bye-bye.